Hey, Jeremy, I'm super excited to have you join me for this episode of Coffee with Closers.
Thanks, Samuel. Great to be here.
Most certainly, every entrepreneur I talk to has some interesting story of how they became an entrepreneur. I was looking through your career history, worked at some really reputable companies in the past, and now you're running your own consulting shop. So can you share with our audience a synopsis of how your entrepreneurial journey came about?
Sure. I've always had an entrepreneurial spirit and really was an intrapreneur for large organizations. So worked for some divisions of ADP and CDK Global, worked for Amcor, a large manufacturing organization, and really in executive roles at those teams, and then pivoted to startup organizations. And so really I'm a recovering CFO and really leading business strategy and financial execution. Had a few exits after leaving the big companies. I went to startups. I had two exits and one great sale or a scaling journey through that. And after doing that, decided, hey, I really want to do this and help really specific founders to deliver on their next step, whatever that next step might be. So yeah, kind of big business, growing up through the corporate ladder, becoming an executive, moving over to startups and leading executive roles for startups, and then ultimately starting my own firm and hiring a few financial professionals to help me help founders.
Awesome. Yeah. So obviously going from those larger enterprises, some of them went even public, and then obviously going working for those SMB mid-market companies. Like what are some of the unique things that you saw across all of those different organizations?
Yeah, the being able to learn what best in class looks like, and having the resources of a large organization to be able to do really interesting and challenging work. And I sat at the intersection of finance, data, and operations, and being able to take really complex problems, really complex data sets for a large organization, be able to dig into that and be able to come up with solid business plans that the operations team can then implement and then track and iterate on that, right? Being able to learn strategy from a powerhouse team and be able to implement those strategies in meaningful ways, and then taking all of that big business learning and applying it to a startup and going, all right, what can you let burn, right? What fires do you just let burn, and what fires have to be tackled now? How do you set processes up really efficiently? How do you leverage your capital really efficiently? How do you make hypotheses and place your chips on the table and fail fast and fail cheap and learn and iterate and be able to scale an organization? So one of the teams I was at went from 5 to 35 million pretty quickly. And at that scale and speed, you're a new company every couple of months. And so I tell people every 3 to 6 months, I basically work at a new company, right? We're hiring 50 new people. We're hiring 100 new people. We're, growing revenue. We're changing the way that we go to market. We're changing our pricing and packaging. And so being able to take that big business experience, be able to bring that down to a scaling entrepreneurial environment and do it really successfully. So like I said, I had 2 exits and then one that didn't exit but had really fast scale, and then be able to take those learnings now and help others is really fun.
Yeah, I mean, it's kind of crazy when you were talking about it. I was also reflecting on our own journey as a business, and I know several tech companies that founded around the same time as we started our company at 1IMS, and where we are revenue and company headcount and everything else in comparison to some of those larger tech companies is just completely different. Like some of them has 10,000, 20,000 employees, $4 to $5 billion in revenue, and it's all in the same time span. And I don't know, sometimes you have to pause and wonder, was it our product? Was it our service offering? What was it that we were doing different that or what were they doing different and better, right? That they were able to have such a crazy trajectory on revenue and company growth. It's just unbelievable. And so I'm pretty sure you've kind of seen the similar thing. Like, hey, these guys all have the same type of talent and skill set, but they're just moving at a much slower pace than some of these other companies, like double, triple. What is that model? Like how to get to $100 million in like five, right? So yeah, I'm just curious, what were some of the things that you noticed?
Yeah, there's this intersection. Honestly, it's like surfing a wave, really. Like it's waiting for the right wave, and if you catch the right wave at the right time, it carries you, right? If you miss the wave just by a little bit, you're gonna eat it. If you're ahead of the wave a little bit, you're not gonna get the trajectory, right? And so people are trying to ride waves, and so a lot of it is just market economics and the market wave. That's my perspective on a lot of like the huge successes is they got the right wave at the right moment, and it put their trajectory just different than everybody else. Now, you can still have a great time surfing, and you can still be a really great surfer without catching that wave, right? And so the greatest surfers are actually ones who are just out there all the time, riding a bunch of small waves and developing their own skill and abilities. So most success in America is not unicorn. Most success in America are SMBs. Most business in America is SMBs. SMBs are our economic engine as a company or as a country. And it's because we have this entrepreneurial spirit. We, put our nose to the grindstone and we build something that is meaningful and that generates a positive economic output. It doesn't need to be the, hundreds of millions of dollars, but if you're generating, 10, 20, $50 million of revenue and have, a decent profit margin on that, you're generating real value for yourself, for your employees, for the global economy in general. Like that's actually where most growth comes from, is not from catching the wave at the exact moment and riding one great wave, but it's riding multiple small waves and being consistent about what you're doing and being effective in your operations and your outreach and working with people who are passionate and who care and making a difference in your life and in their lives. That's for me where things that matter happen.
Yeah, I think I've heard the phrase like the Fortune 1 million or something like that, all the SMBs in the US, right? It's several millions of small businesses that are kind of like what you described. They're just grinding every day, doing the right by the customer and doing some of those things. And even before we even got started, we were talking a little bit about the private equity space. So you mentioned the strategy, and strategy is in the middle name of your business as well. So what is, from a financial standpoint, what are some of the things strategic that you do, or at least businesses should consider doing as part of their growth strategy? Because most people, when they think about strategy, like product strategy, what are we going to sell? Like, well, who are we going to sell to, right? Like those are kind of the things that we think of and how we're going to sell. But what are some other financially focused strategies?
Yeah, strategy is a process. So strategy is really the idea of aligning your resources around your hypotheses and going, all right, what are our hypotheses? What do we think is true, or what has to be true for us to be successful in this thing? And go, all right, what are the problems that we're facing? What are the growth opportunities that we have? Which ones do we think are the most advantageous? Where's the biggest ROI? And how do we test that thing? Do we have the capabilities and the management systems in place to be able to execute on doing that? So I use a framework called playing to win. So you define where to play and how to win, right? Here's where we're going to play. You get really specific. Who are your customers? What are your geographies? What are your go-to-market strategies? What are the channels that you operate in? Where are we going to play? You define your playing field. And then how do we win on that playing field? All right, here's how we're winning today. Here's where we're winning today. Here's where we're not winning today. Here's where we're doing okay, right? And then you create those hypotheses of what does it take to win in this playing field? ooh, do we want to go to another playing field and explore that, right? Is there an adjacency that we go to and do that? How do we test that? What does that look like? So from a finance perspective, first we start with that strategy. Where do you play? How do you win? Do you have the capabilities, the management systems, the people, the skills, the talent to win where you play? Then we take and we do those hypothesis tests. And so part of the back end of that is data and analytics and financial modeling and ROI and scenario planning, going, all right, what does all this look like? So that's the unsexy back end, some of the financial stuff that we do, that we then show up and augment this strategic vision with and go, okay, cool. Here's where we're going to put our chips. Here's how much money we have to invest. Here's where we're going to invest it. Here's why we're investing it. And here are the milestones that we expect along the way. We expect this thing to be true. We're going to do a test, see if that thing's true. That's not true. Okay, if that's not true, then this whole hypothesis is scrapped and we've got to move on to the next thing. So yeah, that's kind of the strategy comes first, and finance and profit and all that really flow from an effective use of strategy and resources.
Yeah. See, the common misconception is most people think like the CFO is there to bless the strategy. Hey, the marketing wants to spend some money, or they want to hire 2 more salespeople, or they want to increase the price or do something about the pricing strategy. They come to the CFO and say, hey, could you sign off on this? Because I'm going to go hire 2 more salespeople, or I'm going to buy this CRM. Can you approve these funds, right? That's usually how we perceive the CFO's role is. And oftentimes we're worried, like, I got to go to the CFO. I'm like, oh, that's a no. We're not going to get that approved right now, right? So you're saying get the CFO involved in that strategic planning of the business, not just, approve this big picture idea that we have. Is that what I'm hearing you say?
Yeah, and it's going to depend on your CFO, right? Some CFOs grew up in accounting and they're accountants and that's what they like. And they're about control, they're about audit, they're about compliance. They might manage your legal team. Like, that's one type of CFO. And maybe that's the type of CFO you have. Maybe that's the type of CFO you need for your organization. Then you're missing a strategic component there, right? You have other CFOs who grew up in FP&A and planning, and they think about economics, and they think about market dynamics, and they think about that world. And sometimes those ones aren't as strong on the accounting side, the controlling side. I've been really blessed in my career to be able to do both, right? So I grew up through accounting, internal control, and was a controller of an organization, pivoted to FP&A and planning, and then I got to lead strategy for a $1 billion division of a $10 billion global. And so I really got to learn like how strategy connects these dots. And so, yeah, it really depends on who your CFO is, what you need in a CFO, and then augmenting where you need it, right? So if you have that accountant CFO, that's where you get worried about. You're going to go to them, they're really risk adverse, they're going to tell you no to everything. And so that's a voice at the table sometimes you need to hear, right? And then, but maybe that CFO needs somebody like me to come in and help with the strategy piece, and who can speak finance, who can speak accounting, and go, all right, let's talk about strategy so that our sales and marketing folks aren't so frustrated when they're like, I want to invest in this stuff. I feel like this is where growth is. And they keep just hearing no from a risk adverse CFO. Sometimes they're actually saying the same thing. They're just talking past each other. And so bringing in somebody who can go, hey, CFO, here's what your sales team is actually saying. Hey, marketing and sales folks, here's what your CFO is actually saying. You're actually saying the same thing. You both want the company to grow. You just need to come up with better hypotheses and box out those tests so your CFO can say yes and go, oh, you're investing in this thing. This is what you're testing. This is how much it's going to cost. If it doesn't work, we're going to scrap it. If it does work, we're going to invest more. And then here's the progress of investment and the progress of return on that investment. Then they're speaking the same language, and sales and marketing are freed up to go invest in areas they want to. And the CFO has confidence that he's going to get a return on that investment.
Yeah, the risk averse part, I think that's for sure is the reason why I think they're very pessimistic in their outlook on what the future is. Because obviously sales and marketing people are very optimistic. Oh yeah, we're gonna 10x our return on investment, and CFO is like, nah, I don't believe you. Prove me before you prove to me. So obviously you've mentioned before our show started, you've mentioned there's a kind of three type of customers that you help. Can you tell us a little bit about those three different kind of customers that you serve?
Yeah.
Or at least three different stages of their journey, I guess.
Exactly. So I help founder-led organizations, and those are typically one of three spaces that I play in. One is early stage. They can't afford a senior executive. They shouldn't afford a senior executive, right? This might be bootstrapped, seed round, A round, sometimes prepping for B round, some of those early stages where even the B round, like they probably want to invest in accounting, but not really a strategic CFO at that stage, way too early. So I come in and do financial advising on that function. Let's make sure you're set up right for success. Let's make sure you know what you need to deliver between your seed and A round, right? What has to be true for us to have a successful A round? All right, let's make sure that we're tracking those things, we're delivering on those things, we're not getting distracted with everything else that we could be doing, but that we're laser focused on what has to be true to get to the next stage. So those early founders, it's getting to the next stage. What's your burn? How much do you need for capital? What are you going to need to know in order to go to market and raise funds? Other end of the spectrum is pre-exit. So I come in pre-exit. I've sold some companies. I've bought companies. I've been a part of about 16 transactions, M&A transactions. And so I know what it takes to buy and sell companies. There's a lot of founders who want to sell. They're ready to sell. They've had the company for a little while, but the metrics aren't good yet. They go to market and they're getting valuations that they're just not comfortable with. They're like, I don't want to sell my company for that much. I put so much into this. It doesn't sound like I'm getting the right price. So I come in and help them with a strategic plan, usually 18 to 36 months, to say, all right, here's what the metrics need to be to get the valuation that you're looking for. And let's strategically attack things to facilitate growth, to get the metrics right. Maybe your margins aren't right. Maybe gross margin needs to be improved. Maybe it's EBITDA improvements, whatever it is that needs to go through there. It's always going to be sales and marketing growth. Or maybe sometimes it's sales and marketing pivots of like, hey, certain segments are unprofitable, certain segments are more profitable. How do we pivot our kind of footprint? So anyway, it's coming into those pre-exit companies and helping them get ready for exit. On the back end, it's also the exit package. You want your financials really clean. So if you've never had an audit before, coming in and making sure that they're audit ready. Quality of earnings from a buyer is harder than an audit. So if you haven't done an audit, we've got to get you audit ready and then quality of earnings ready. So on the back end, it's prepping everything so that you have a really solid experience. When you do take it to market and sell, the buyer doesn't go, crap, your numbers aren't right. Like, I promised you this rate and now I'm going to mark it down and pay you half of what I wanted, or 3/4 of what you wanted, because you weren't really prepared going into that. So that's the early stage, that's the late stage. And then the other one that I help are turnarounds. So things were going good, now they're not going so good, and we need to rebalance and figure out how to turn something around. I've been blessed to be a part of 7 turnarounds. Some people look at me and go, I don't know if blessed is the right word. Like you might be a glutton for punishment if you've done 7. 6 of the 7 were at least successful, right? Got into the black, went well. 1 of the 7, we weren't able to turn it around in the 6 months I was working on it. But that's a pretty good track record as turnarounds go. Most turnarounds are actually not successful. Turnarounds are hard. Things are going the wrong direction and you don't know why, and you got to figure stuff out. So I have a whole framework that I have to support turnarounds as well. So those are the 3 segments or kind of like focuses that I have: is early stage, pre-exit, and turnarounds.
So early stage guys are trying to prove to an investor why they should invest, right? Or even to try to attract the right type of talent to come join the team too, right? If we're making money, we have happy customers come join us. Also, hey, bank or investors come spend some money with us, right? And then I guess the exit stage is like they have to prove value to the buyer so they can get a higher multiple on that the company value, right? On that exit time. And then obviously the turnaround is like we're kind of not in the right direction. We're not heading in the right direction. We have to figure out what has to change. So what's common across all of them? Are there some sort of a common theme that you see across all of these? Can you speak to that a little bit?
Yeah, I would say the theme is product market fit. Like it's all about the sales and marketing engine. It's about being able to communicate the value of what we do to the right customers. All right, here's our specific customer segment. We know we're successful with this customer segment. Here's our messaging to get to that customer segment. Here's how we do it. Here's the process. Here's what it looks like. At the end of the day, that's what investors want too. Early stage, it's all about evaluating and finding product market fit, right? Once you find product market fit, you're ready to scale and go, great. Now you're really going to get a strong, Series A, Series B, because then you have product market fit. They'll just throw sales and marketing dollars at it and drive that thing. So early stage, product market fit. Late stage, product market fit. It's usually that they got distracted with something. They've got a few products that aren't working and they don't really realize those aren't working. Sometimes the culture or the team aren't firing in all things. Maybe you have a couple B players that aren't really pulling their weight, right? So you've got some things late stage where you're like, what are the inhibitors of growth? What's getting in our way? But again, it's product market fit. It's about who's your customer, what are we selling them, why are they selling it, why are we selling it to them, and then you've got operational complexities behind that, right? Of like, here's all of our operations, here's how we actually deliver that value, and how do we deliver that value more cost effectively. In the middle, they're in a world of hurt. So I actually have an A-B plan. Plan A is, can we get the engine started again? Can we get sales and marketing engine started again? That usually requires a change of leadership. And you may have the wrong people doing your sales and marketing work right now. Or if you've got the right people, they may have the wrong messaging, the wrong go-to-market engine, right? But can we get that engine working again? You can make that decision pretty quick and go, all right, give them a couple of months and here are the big changes that we think if we make, we'll do it. If that doesn't work, plan B is you essentially cut everything that's not profitable, what's not working, and focusing on only what's working really well. And the line in the sand is not, we don't know. If you don't know, it's not profitable. The line in the sand is, this is profitable. This is clearly profitable. You draw it down to just that. You reorganize the whole back end to go, all right, everything now delivers only this service that we know we can sell, that we know is profitable, that we know is effective. And you take that back to market and you go, all right, this is the thing that we're going to do. We're not going to do 5 things. We're going to do 1 thing. We're not going to do 15 things. We're going to do 3 things. And it's the things that are highly profitable that are working. And you have the organization behind that. And there's a whole capital planning and capital structure aspects to it, but essentially freeing up cash to be able to invest in what works. So all 3 of them, it's about customer, product, sales engine throughout that. How do you get it going in the beginning? How do you accelerate it at the end? And how do you revitalize it when it's broken? And that's the connecting thread, I would say, between all of it is, where do you play? How do you win on where you play? And do you have the capabilities and resources to be able to deliver on your playing assumptions?
Yeah, I think they say sales cures everything. So you kind of have to have your sales and marketing engine really running efficiently. So what are some baseline KPIs that you look at to see the health of a company, whether that's in early stage trying to determine, hey, are you even ready to even go to market, raise money, or even exit stage? Like, what are some KPIs, especially on the front end of the business, right? Which is like like your sales and metrics in terms of like conversion and customer customer churn or rate, acquisition costs or anything like that?
Yeah, I work in multiple industries. So each industry is different when you talk about KPIs, but there's some common themes around it, right? Especially on the top end and the engine, the sales engine, you got to look at what is your cost of acquisition and what is the value of the acquired customer, and go, okay, here's our cost of acquisition and here's the value of the acquired customer. That might be a lifetime value. That might be, an order value, like if you're in e-commerce or business, right? So the value of the customer is different and the cost of acquisition is different. But you need to analyze those pieces and go, is my engine running efficiently? Can I continue to scale it? And then you look at marginal improvements and go, if I put $1 in, do I get $1.50 out? Right? And does that marginal improvement improve over time or decelerate over time? So at some points you're putting $1 in and you're getting $3 out, and then you put $100,000 in, and instead of getting $300,000 out, you only get $120,000 out. You're like, wait, I put $1 in and I got $1.20 out. Like, why is that, right? So as you scale that engine, what are the unit economics, and how does that scale change over the life of that team? So those are two that I look at, like really pointedly at the top, at the sales engine, to go, all right, what's my cost to acquire a customer? What's my cost of sales? What's my cost of marketing? Like what are the costs that are going into it? And then what am I getting out of it? And the getting out of it is usually a profit basis, right? Not a revenue basis. So that's great. You're getting certain dollars out of it, but what's my profit basis that I'm getting out of it? How much are my cost of goods sold? How much are my cost of service, my cost of delivery, like whatever those functions are? And so I'm going, all right, here's what I get out of it. So you really see that ROI, and then drive ROI, right? Okay, great. It's ready to drive. I put $1 in, I get $3 out. I'm going to just slam that all day long and keep throwing money at it. That $3 sometimes goes to $4, sometimes goes to $2. And then you have to figure out why, right? So, yeah.
Yeah. So what's like the easiest way to track that cost of acquisition? Because I know it's not easy to do so if you're not in an e-commerce business where you can see someone comes to the website, took out the card and made a purchase. It's a very, very linear process. You can quickly see whether you made money on that. But when you're talking about large orders, right, especially I think you mentioned some of the companies that you worked for, those are larger enterprise deals. It might take probably 18 months to close a deal, right? So what's kind of like the basic things that you would add up and divide it by the number of customers to see how much is it costing us to win a new client?
Yeah. So especially I've worked in health tech companies that are working with hospitals that have buying cycles that are 12 to 24 months long, large enterprise contracts, same like an 18-month enterprise license, enterprise contract process, even a good one at 6 months, and be like, great, we can close an enterprise contract in 6 months. Like, okay, great. That's pretty good. At the end of the day, you can aggregate all of it and look at it that way. And then you can start to disaggregate it and look at it that way too, right? So you can say, all right, here's my total costs of sales and marketing as a percent of revenue, right? And just go, all right, here's how much revenue I have. Here's how much I'm spending on sales and marketing. Like, does that ratio make sense? Is that ratio improving, or is it decelerating instead of accelerating? So that's an easy one to just go ratio, percent of revenue over time, look at the past 2 years in your financials and go, how's my engine doing relative to my revenue? And then you disaggregate that and start looking at your segments, your specific people, especially in SMBs, right? If you've got 5 salespeople, it's really easy to analyze 5 salespeople and go, all right, what are they doing? How much are they costing me? How much revenue am I getting out of those? A wholesale customer that I have, for example, manufacturing, they have a wholesale business and they have an e-com business, and their wholesale side, I can go, great, I have this many salespeople. Here's how much it costs. Here's their salaries. Here's their commissions. They've got some outside resources that they use. Here's the commissions and costs of outside resources. Here's the incremental revenue that they're generating. And I say incremental for a reason. It's not just the baseline, right? They've got a bunch of customers already. They're placing orders every month or every quarter, or whatever the like cadence is for our regular orders. Not paying salespeople for regular orders. I'm paying them for growth. And so I go, all right, how much did you add to the business? Oh, those customers were at, $1 million last year, and now your portfolio is at 1.2 million this year. Great. You added 200 grand, and I happen to pay you 250 grand. That's not a good deal for me. Right? Oh, you went from 1 million to 1.5 million. I pay you 200 grand. All right, we're good. Right? And so it starts to get into like, what are they delivering? What is it? And then you can look at lifetime value of that as well, right? So maybe that portfolio goes from 1 to 1.2. They only added 200 grand, but their total comp is more than that. But that 200 grand, maybe that compounds every year, right? Next year it goes from 1.2 to 1.4, from 1.4 to 1.6. And I go, okay, if they're adding that incremental every year, then I'm getting a compounding impact of that revenue. So it really depends on your market, if it's a recurring business, if those sales are reliable, or if you've got to hunt for every dollar and it's a one-time deal, right? And you only get that one thing. So it's a little bit case by case, but there's that common theme between it. I've been like, all right, look at it high level, and then let's get granular into whatever makes sense to look at it for your business and go, yeah, here's how I measure the effectiveness of my sales and marketing engine.
Yeah, and I think whenever I've seen businesses don't really have any idea on the cost of acquisition or even lifetime value of a customer, they're the ones who are always sitting on the fence like, oh, we can't invest in marketing, because they have really not done the math to see that, hey, if I can spend $20 more than my competitors to acquire customers, I'm going to always win, and I have a much better chance of owning that market share. So obviously you mentioned data being one of the big part of what you look at before you making strategy and recommendation for these companies. What are some tools that they need to have in place to even start measuring some of these things?
Yeah, the better the tooling, the better the data, and the more clear the answers, right? The worse the tooling, the worse the data, the less confident you are in your answers. I've been, we call it AI now. I've been in this space for it started out as big data, then machine learning, now it's AI. It's all the same thing. It's all taking the data that you have and gaining insights from that data and being able to make confident decisions with data. So if you have a good CRM, if you've got a good business intelligence ecosystem, I'll call it, that might just be a decent database structure, right? And go, okay, yeah, we've got a good database structure. We have clean data with good like ETL processes. Like we use a good like a DBT tool or something like that cleans and adjusts the data as it goes into our data warehouse, and we have clean data that we can look at. And then you can stick whatever BI tool you want on top of that and go, okay, cool, here's our BI, here's how we query the data, here's what gives us confidence in that data set. So a CRM, HR system, and an accounting system of some kind. And if you have like those three core things, like you can typically pull together really decent analysis. If you have some kind of customer database and then the values for those customers, right? So financial data connected with customer data to say, all right, cool, here's our customers and here's how much they spent with us. And like, here's the profit that we have from them, whatever that infrastructure looks like. The better the systems, the better the data. And it doesn't have to be expensive, and it doesn't have to be like the end all be all, right? Your accounting system does not have to be NetSuite for you to be successful. You can still be in QuickBooks and have decent data. Your backend data set like does not need to be a Azure like data lake that you're working in, right? It can be whatever your tool of choice is, and you can query something, right? So even like just a good Google BigQuery database that you're loading data into, and you have some support. If you don't have it on your own team, right, you can get outsourced help to go, hey, we want to create a database structure. Like, how do we do that? What does that look like? Likewise on the CRM, right? Like if you're managing things with your email and a spreadsheet, like you're not able to communicate that to the rest of your team. And so if you have a decent CRM, you can pull from, whatever it is, the Salesforce, the HubSpot, like, and go, okay, cool. Here's what that looks like. Here's the funnel of sales, and here's where they start as leads. Here's how the leads convert into meetings. Here's how the meetings convert into opportunities that convert into close won contracts. Like, as long as you have a tool that shows that funnel, then you can model off of that. You can make better decisions. If you can segment your customers, you're even better, right? If that thing says, hey, here's my customers, here's the segments that they live in. We're seeing really great traction in this segment. And like, here's the revenue dollars and the profit from that segment. That segment's actually more profitable for us, and we're getting better traction. Or sometimes you go, this segment, we're getting a ton of traction, and then you marry it up to the financial data and you go, but the margins aren't great. And then you see this other segment and go, we don't have great traction in this segment, but the margins are amazing. And then you do some of the math and you go, actually, $1 spent in this section over here that's not as great of a funnel. It takes a longer lead time. We have to put more money into it. But in the long run, we actually generate a lot more profit off of those sales than we do off of this piece of the funnel that works really well, but has a lower margin. So it's being able to connect that customer and financial data through all of it, and then be able to connect it back to the entire operation that delivers it and say, all right, who's delivering the service? Who's delivering, how are our sales doing it, right? What does our manufacturing team look like? Which products are effective and efficient and what aren't? And so that's where like your other ERP functions come in, right? If you need a warehousing system for manufacturing, or if you need an HR system for something that's labor intensive, how are you tracking hours? How are you tracking labor? How are you tracking delivery? All of that stuff really feeds this like triangle of data. I've got customer data, I've got financial data, I've got operational data. I can connect all three of them and make decent assumptions that give me confidence that I'm investing in the right spots.
I mean, I think when you were talking about it, I was just thinking about kind of our own customer base as well. So we have a lot of clients, may not be a lot of them most of them are in the growth stage or scale stage, and some actually are in the kind of the exit stage where, the founders no longer want to be running the company. Some of them are baby boomers and things like that. But oftentimes what you just described is what we're actually looking for when we're trying to determine whether or not we can help this company, is asking questions like, hey, where do you get most of your leads? How do you segment them? What's your average order value? How long does it take you to close the deal? What's the lifetime value? And oftentimes these companies do make money, but often the data is not easily accessible. They don't have a CRM in place. They don't have a marketing automation in place. They don't track every interaction that the customer is having with that brand. So they don't know how many times the salesperson talked to them, how many emails, how many meetings, how many calls, because all of those are part of the cost of acquisition that oftentimes they just don't have any visibility into. So having the right type of tool set, and you oftentimes they go cheap on those technology because they're trying to be cost efficient. They're like, oh, why would I want to go spend money on $150 a seat on a sales tool when I can get the same tool for $10 a salesperson? Like, all I need is just track their deals and how many deals they're closing. No, you're actually going to lose some insight in the future. And also just the cost of migration. We had to help organizations that are at a certain stage and then they're outgrown their technology. Now they're spending 6, 7, 9 months to try to get off of an existing platform into a new platform. Now a lot of the lost data because of migration doesn't bring all of the information you want. So like really thinking through some of those things, like don't go cheap on your tech stack sometimes, right? Like you want to have the best in class that grows with you is important. And also you do need to have really good segmentation and some insights on like who really brings us the money. Like if you don't have that, you're making guess. Like if you're looking at just the volume, we close a lot of these customers, but then like you said, maybe you don't close a certain segment of the customers at a higher rate, but they are much more profitable. But if you don't have that insight, your emotion is driving decisions, not necessarily data dictating that. Do you have any rule of thumb? Like you mentioned, like a percentage of your revenue as the marketing and sales. So do you have any rule of thumb that you look at? Like, hey, at a growth stage or an exit stage, this is how much you should be investing into the sales and marketing function of the business.
I don't like benchmarks necessarily. I look at them. I have some of them. They're interesting. But the question for me is, what is the biggest opportunity for you? Right? What's the biggest opportunity for you in your organization? What's the lowest lift and the highest return? You're like, all right, what's the lowest hanging fruit? Like you can take this stuff with almost no cost and increase your profitability. Do that stuff. That's a gimme, right? Oh, there's things that we don't know, we don't understand. Okay, we're going to have to invest in some data infrastructure to get some understanding. And it's a continuum. Right, like I said, those early stage, it's about knowing what fires can burn, and be like, that's not important right now. Focus on this. This is what's important. Same for the late stage. Like what's important there is very different than what's important early. In the turnaround, what's important in a turnaround is very different than what's important in either of those other two scenarios. What's important for every one of your listeners right now is going to be different for their organization, and so it's mostly about what is the return on the investment that I'm doing, and am I confident in that return? You go, all right, here's the greatest confidence. In fact, I just came out of a strategy session a couple weeks ago, generated 70 ideas for investment, right? This laundry list of 70 ideas. And then we went through and we rated what's the effort on each of these and what's the potential return on each of these. And as we went through and said, all right, effort and return, and gave each one a score, what came out of it is actually some of the ones that have a moderate return but very low effort were the most likely to succeed. You go, no, it's not the unicorn. It's not the like Hail Mary that is going to make our company. It's actually these block and tackling decisions of going, that's really easy and the return is decent. It's not a huge return. It's not the unicorn return. It's not the number one return item, but it was a 3 or a 2. Like it was right up there underneath those, and the level of effort was way under. And so being able to make those decisions and go, what's the most likely path of success for us as a company? And that's where like bringing experts in to validate your assumptions is really helpful. Of going, okay, we think that this is the most successful thing. Who could I bring in to help me validate that? What is the next step to validate that? Do I need data? Do I need a market test? Where would I test it? How would I test it? Do I need to talk to somebody who's done this before? Like, what is the resource I need to give me more confidence that that's the right bet? The more effort, the more steps you need to get to validate that that's the right bet, right? The lower the effort, the easier it is just to say yes and move on. If you say yes, you generate that profit. Now you have more profit to invest. And so then you can go for your bigger bets and you can put more money on a few spots on the board and go, all right, like that one's really worth investing in now.
And how often are you recommending customers to just grow from customer-driven growth, meaning like they sell more and then investing into the business versus let's go borrow some money or let's get some infusion of cash from a VC firm?
Yeah, I'm all for profitable growth. The infusion of capital should be done really purposefully. So there are companies that want to scale fast, and want to use somebody else's money to do that. That's purposeful, right? It'd be like, nope, we are going to be a VC-backed company. We're going to go get, early stage seed investors. Then we're going to get bigger VC funds. Here's what that looks like. Here's how we're going to do it. There are other companies that are saying, nope, we're bootstrapped or we're family owned, and like here's how we do it. Here's how we're going to facilitate growth. What's the capital source, and how do you want to maximize your capital, and what's the return that you're looking for on it, right? The more you give equity away in some ways, like you're giving up power, you're giving up money, you're losing some control of the organization. The same thing happens with debt, right? If you go get debt, you're losing power, you're losing control, you're giving up some of the organization. It's different, but now you're beholden to a bank who is super risk adverse. Like, you thought your CFO was bad, go talk to your banker. Like, your banker is awful when it comes to risk. They have like zero risk tolerance. Like, they're the most risk averse investment that could possibly be. And so if your capital structure works, that you want to get that debt, like what are the levels of risk adverseness that you want to invest into? Whether it's a simple revolver that gives you freedom and gives you flexibility, all the way down to a fully structured loan, and go, all right, these fully structured loans that leverage our capital, that leverage whatever it is that we're putting on the table for that, are really risk adverse, right? So you've got this spectrum of risk of going venture capital are more risky, but they're going to take their piece of the pie for it. Banks are way risk adverse, and they're going to take fees instead of like part of your ownership. So you still got to retain your company, but both scenarios you're giving up something to do it. So you have to decide, what am I willing to give up? I'm willing to give up as little as humanly possible. So I fund as much of my growth as I can from my own growth and go, great, I'm going to invest in this thing. It's going to grow. It's going to generate more cash. And then I'm going to invest in it more until it hits an asymptote. Then I'm going to move to the next thing and go, all right, what's the scale and trajectory of my bets, and how much can I invest from my own organization instead of going somewhere else?
Yeah, and I can certainly expand on this more too, but in the interest of time, I wanted to ask you a couple other questions. Obviously, they say 10% of something is better than 100% of nothing, right? Like, that's usually the logic that they say, go raise capital, because you actually will build something with it. Otherwise, you're just wasting your time. But I've also seen companies that with their capital, sometimes they don't invest into their company, but they go buy another asset that grows in value. Whether that's like a service company that has some cash, that they go and buy a tech-enabled platform that would add to the company's overall product portfolio to now increase the overall company value. So it doesn't always have to be just growing within that company, right? You can reallocate and deploy the capital in so many different ways to grow. So what's the most rewarding thing about your job? Obviously, you helped so many different companies. You said you had the 6 turnaround stories that went successful, and helping these companies grow company value and raise money and also go public or exit. What's the most rewarding thing about what you do?
I have 3 career goals that don't sound professional. 1 is to be a great dad. 2 is to do hard work with people I call friends. And 3 is to make a difference in the world. And so when I get to do all 3 of those, that is the epitome of reward for me. Is I have flexibility and freedom to be the father that I want to be. I have friends that I'm working with that are doing hard things, and that are doing meaningful things in the world and make a difference. Our society is built on the shoulders of giants, right? You think about just the things that had to happen for us to have this conversation, right? All of the components that went into all of the equipment that is here, right? Everything that keeps my house warm and comfortable. Our lives are truly built on the backs of giants, and like, I don't take that for granted. Like, we're so blessed. And so the most rewarding thing for me is being able to help companies. My accounting specifically is unsexy work. Strategy work is hard, and it's not sexy. Like, it's actually just tactical, simple, like, things, and firms make it too complex and do all that. But like, the doing the unsexy work. And, all of our companies are doing something meaningful in the world. And even if that's, I pump out just metal and I sell that metal to somebody else who makes it into other things, right? Like you're making components of something bigger, or you're contributing to something bigger. You're contributing to the lives and the families of the people that you work with, that you work through. So the most rewarding thing for me is the relationships and being able to build on the foundation of continue to stand on the shoulders of giants and make the world a little bit better in whatever way I can make it a little bit better, right? I make your life a little bit easier because I give you more confidence to make a decision. I relieve some of the stress of your life. That stress is stress now you don't take home to your kids. You get to be, a better spouse, a better friend, a better human being. I get to be a better human being as a result. Like, that's the spirit that I view professional relationships. And that's what gives me satisfaction.
Yeah, having that sort of a perspective makes you a grateful person too, right? Because you have gratitude about what you do and what you get to do. And you'll operate out of that grateful heart. It does make a big difference in the world. If you can go back to your younger self and tell the young Jeremy and advise, what would that be?
Oh, man. Young Jeremy was a go-getter. I tell you what, like, I moved up the ranks fast and hard. I've been a CFO now for over a dozen years, and I don't know. I honestly don't know, because the life is created in the journey, right? Would I ask for anything different than what I've been given? Like, I think of the challenges, I think of the heartbreak, I think of the struggles of life and the decisions I've struggled with and tried to make. And sometimes I made the wrong decision, and what happened there. Sometimes I made the right decision and didn't know about it until years later. Oh, when I look back and go, oh, that was actually a good thing. I don't know if I'd ruin it for myself. If I went back to myself, I'd probably just be like, what questions do you have for me? And I would debate with myself about what it would be. But I don't know if I'd want to ruin anything for myself, because the journey has made me who I am.
So true. That's a great answer, because a lot of times I think you can, hindsight is 20/20. So you can look back and say, oh, you wouldn't have made that decision, but that did prepare you to the person that you are today, right? And given you opportunities and how to deal with those challenges. I certainly enjoyed that conversation, Jeremy. Thank you so much for joining me today. Appreciate it.
Thanks, Samuel. My pleasure.